Welcome to Forex Essentials, a beginner's guide to Forex trading, prepared by the Cruise Institute. Welcome to the world of Forex trading. Forex trading, as also known as foreign exchange trading, is a fast paced and exciting market where traders buy and sell different currencies. It is a decentralized market, meaning there is no physical exchange where all trades take place. Instead, trades are conducted electronically between traders all over the world. The Forex market is the largest financial market in the world with an average daily turnover of around $6 trillion. This market is open 24 hours a day, 5 days a week, allowing traders to trade anytime they want. Forex trading offers many benefits such as high liquidity, low transaction cost, and the ability to profit both from rising and falling markets. Forex trading is, of course, not without its risks. Traders can lose money just as easily they can make it. So it is imperative for beginners to educate themselves about the market and develop effective trading strategies before investing real money. In this presentation, as the Cruise Institute, we will provide you with a comprehensive guide to Forex trading for beginners. We will cover all the basics from understanding the Forex market to managing your risk as well as choosing a reliable Forex broker. This presentation will provide you with valuable insights and practical tips to help you succeed in Forex trading. Let's get started. What is Forex? As mentioned, it stands for foreign exchange, which simply means the trading of different currencies from different countries. It involves buying and selling one currency in exchange for another with the aim of making a profit from changes in their exchange rates. Forex trading, as mentioned, takes place in a decentralized market, meaning there is no central exchange, no physical contact. All trades are conducted electronically, right? These people involved can be traders, financial institutions, and banks located all over the world. As mentioned, it is open 24 hours a day, 5 days a week from Monday up until Friday. Markets close over the weekends. This allows us as traders to trade at any time and from anywhere in the world. With an average daily turnover volume of $6 trillion, the Forex market is the largest market in the world. A brief history of Forex trading is that it can be traced back to ancient times when people would exchange different types of currencies to facilitate trade. However, modern Forex trading as we know it today began in the 1970s when world currencies were allowed to float freely against each other. Moving on to the 1980s, electronic trading platforms were then developed, allowing traders to buy and sell currencies electronically without the need for physical exchanges. The introduction of online trading platforms in the late 1990s made it easier for individual traders to access the forex market and to participate in trading from anywhere in the world. So advances in technology have definitely transformed the forex market. It has made it faster, it has made it more efficient, as well as accessible to a wider range of traders. Today, the forex market is a global market with the average daily turnover of around $6 trillion, making it the largest and most liquid market in the world. Who can trade Forex? Anyone can trade Forex. You are a teenager, you are a varsity student, you are working, you need a side hustle, you can trade Forex as there are no specific requirements or qualifications needed to participate in the Forex market. However, something to note is that it is important that Forex trading, to note that it involves high risk and requires extensive knowledge and skills to be successful. In this presentation, we will provide you with a comprehensive guide to Forex trading for beginners. We will cover all the basics from understanding the Forex market as a holistic theoretical view to managing your risks and as well as choosing a reliable Forex broker. This presentation will provide you with valuable insights and practical tips to help you get started in the Forex trading markets. Let's get started. Individuals can open an account with the Forex broker and start trading online. It's as simple as that. So, most brokers obviously offer different types of accounts to suit the needs of different traders with varying minimum account sizes and trading requirements. You can also trade Forex through financial institutions as well as banks, particularly for larger trades. However, trading through these channels usually requires a higher capital investment and they may have trading requirements, stricter trading requirements. So it is important to note that Forex trading is not suitable for everyone, particularly those who cannot afford to lose the capital they are investing. Always deposit money you are willing to risk and willing to lose. So it's important to recommend individuals to educate themselves on the forex market and trading strategies before investing any capital. Additionally, it is advisable to start trading with a demo account to practice your trading strategy, your skills, and to obviously test the trading platform that is offered by your chosen broker. The benefits of forex trading offers high liquidity, low transaction costs, 24-hour markets, high leverage, as well as diverse trading opportunities. With high liquidity, forex market is the largest and most liquid financial market in the world. As mentioned, it has a daily turnover of around $6 trillion. This obviously means traders can buy or sell currencies quickly and easily without worrying whether I'm going to find another buyer or seller. We have low transaction costs as compared to other financial markets or the banks. The transaction costs for forex trading are relatively low. Most forex brokers charge a commission based on the spread, which is simply the difference between the bid price and the ask price. We have 24-hour markets. The Forex market is open 24 hours a day, 5 days a week, Monday to Friday, due to different time zones around the world. This allows traders to trade at any time of the day and anywhere, depending on their schedule and preferences. It also offers high leverage. Forex trader allows us as traders to use leverage, which is really the gold mine in trading. This is the ability to control a large amount of currency with a relatively small amount of capital. This can amplify profits, but it's also important to note that it can also increase the risk of losses. And lastly, we have diverse trading opportunities. Forex trading offers a wide range of trading opportunities to traders, including major currency pairs, exotic currency pairs, minor currency pairs, cryptocurrencies, and much, much more. So, this allows us as traders to diversify our portfolio and take advantage of different market conditions. Overall, trading or forex trading offers potential for high profits and is accessible to a wide range of traders, making it a popular choice for individuals interested in trading. However, it's important to note that forex trading also comes with high risks and requires extensive knowledge and skills to be successful. What are the risks involved in trading? We have market risk, which is which means really the forex prices, as we know, are highly volatile and can be affected by a wide range of economic, geopolitical factors. Fluctuation in currency prices can result in significant gains if you're on the right side of the market, or significant losses if you're on the wrong side of the market. We also have leverage risk. So this allows traders to use leverage to control large positions with a small amount of capital. So while this can amplify profits, it can also increase your risk of losses. So traders may lose more than their initial investment if the market moves against them. We also have operational risk. So forex trading involves technical and operational risk. These can include platform malfunctions, internet connectivity issues, human error. These may lead to trade execution delays, losses, or even missed opportunities. Lastly, we have regulatory trading, or rather, regulatory risk. Forex trading requires very forex trading requires or regulations vary from country to country, and traders need to comply with local laws and regulations. Changes in regulations may restrict or even prohibit forex trading in certain jurisdictions. So it is essential for traders to understand and to manage all these risks through proper risk management techniques such as stop loss orders. You can use position sizing as well as diversification. So, as traders, we need to also educate ourselves on the market and trading strategies before investing our capital. How can we prepare ourselves to forex trading? Firstly, we need to educate ourselves. Forex trading is a complex and a dynamic market, and it is important to understand the basic concepts, terminology, as well as trading strategies before you start trading. You can take courses, you can read books, articles, you can watch educational videos on platforms just like YouTube to obviously aid your knowledge, your skills, as well as your experience. We can research brokers. Choosing a reliable and trustworthy broker is crucial for your trading success. You need to look for a broker that is regulated by a reputable authority, has a user friendly trading platform, offers competitive spreads and fees, and provides good customer support. When you are faced with issues, you need a good customer support. So we need to also set realistic goals, set achievable and specific goals for your trading. Trading is a personal thing, such as a target profit, a maximum loss limit. This helps us stay focused and disciplined, and we avoid emotion driven trading decisions. Next, we need to develop a trading plan. This is a roadmap that outlines our trading strategy, our risk management techniques, and our trading schedule. It needs to be flexible enough for us to adapt to the changing market conditions and your trading goals. We need to manage our risks. Risk management is a crucial aspect of successful forex trading. We need to be able to determine our risk tolerance. Am I an aggressive trader? And I'm a conservative trader. Determine your risk tolerance. Use stop loss orders always, and avoid over trading or taking excessive risks. Next, we need to practice with a demo account, strategy testing. Most brokers offer demo accounts that allow us to practice trading with virtual money in real market conditions. This is a great way to test our trading plan, our strategy, to improve our skills, as well as gain the confidence to trade in the financial markets before using our real money. And lastly, we need to keep a trading journal. You need to keep a record of your trades, including the rationale, entry and exit points, the results, so this can provide valuable insights into our trading performance and help us improve our strategies where we need to. Remember, forex trading requires hard work, it requires discipline as well as patience, and there are no guarantees of profits. However, the good news is with proper preparation and a solid trading plan, we can increase our chances of success in the forex market. Thank you.